Hi, I'm Chris Levy, technical partner at Aquila Super. Next up in this, series of brief webinars or web sessions we've been doing to, basically provide accountants with advice and, in relation to the auditing of super funds and give you some guidelines and make the audit process go smoothly. I'm going to cover, some areas that really, most accountants would be puzzled as to why I'm talking about it, and that's the bank accounts and term deposits, because to most accountants they're fairly simple and fairly innocuous, and in their minds they think, well, what issues can arise that can actually cause blockages for the audit process? Well, in actual fact, they can be problematic. And it's usually simple things, but it just tends to slow down the audit. So the first thing I want to talk about is, look, this question arises periodically: does the accountant have to provide all of the bank statements, or even any bank statements? And the simple answer is, look, yes, you do. Our position at Aquila, which seems to be very strongly pushed by the ATO, in our dealings with them, is that yes, you need to provide all bank statements, rather than say, general ledger and then maybe a statement, at the end of the year or during the year. I do know some accountants that accept a single statement. That doesn't align with, again, how the ATO of, looking over auditors' shoulders. And the reason why that's so important to the ATO, understandably, is because the general ledger may not actually show, for want of a better word, contra type transactions. And I've actually seen this in real life, with a fund I had a couple of years ago, where they gave us the 30 June statements, and the general ledger, and there was an erroneous payment. It wasn't massive, but it went in and then it went out the next day when the trustees realised the error, and that error just disappeared from the general ledger, like just contraed out. Look, it doesn't change the fact that that was still a breach. It was still, Reg 4.09A. And as auditors, not only are we, it's expected that we look for that and check for that, but that we advise the trustee of the breach, even if it's not material. So yes, that drives the need for us to have all the bank statements. Now, I will say, however, little asterisk, when it comes to data feeds, look, again, in most instances, particularly when you're using the BGL software, or any other sort of software except for Class, look, the data feeds don't count. They're sort of the view of most auditors and the ATO is that, look, it's like an Excel spreadsheet. It's useful, but it's not sufficient audit evidence to support the transactions or verify the transactions that have happened during the year, because they're easily modified. So that doesn't work. The Class software, though, is actually a little bit different. You can generate reports directly from the Class software that clearly states that the transaction listing is actually unmodified, and that does count as a replacement for bank statements. Now, in that instance, we probably will still ask for a 30 June statement, simply, just a bit of comfort that it matches up to Class, but also because we are still required to check the legal ownership of the bank account. Whose name is on that? Is it the fund? Is it the trustee? Because we do see often, sometimes for whatever reason, it's not correct. So yeah, look, we need to check that aspect as well. Okay, so look, those are the main issues with bank accounts. A couple of other smaller ones is, there are instances where we'll receive a fund, and essentially, 1 in 10, and they'll have these tiny little, almost semi-dormant bank accounts of $3 in, and there's no movement during the year, and they say, well, do we need to provide anything for that? Because it's very much trivially material. Look, I think in that instance, we'll probably ask for at least the 30 June statement, and it can be a problem. Most trustees, it's an annoying little leftover. They don't really get any sort of correspondence for it. As auditors, we still need to check that. So look, we don't need all the statements necessarily, but we certainly do need at least one. Another aspect of bank accounts that can be problematic is where the fund is involved in some sort of property partnership, where there's a bank account attached. If the fund is, say a 50% or a 1/3 owner of a property with other parties, that's not an issue. But typically what happens is there's actually a bank account attached to that partnership to receive rent and pay expenses. And in that instance, we need all the statements for that partnership. And the auditing aspect of that, or the reasoning, is because the way partnerships work, the fund is effectively a proportional owner of that bank account. Therefore, if that bank account went into overdraft, it's not some unrelated or semi-related entity. It's the fund's bank account, and the fund is it's resulted in a breach of the fund, even though it's other parties involved. So again, we need all those bank statements. Yeah, look, I think that's pretty much it. The final point I'd make is occasionally people ask, look, does a fund even need a bank account? Look, simple answer is yes, you do, because you need to have one for the bank account. If you don't have one and you put a non-fund bank account in there, it does create an issue about Reg 4.090, that you're actually mixing up fund and non-fund assets, as it were. So yeah, look, make sure your trustees actually do have a bank account for the fund. Next area, term deposits. Look, again, these are actually even in some ways even more simple and more basic than bank accounts, but again, they can be problematic, partly because of their inherent nature. And what I'm saying there is that typically a trustee will be able to provide sort of the initial investment correspondence, where the money's first given to the bank to invest in that term deposit. But then typically the bank doesn't really provide any more correspondence until maturity. And so as auditors, we're required to verify the balance at 30 June. And granted, we might have all correspondence earlier in the year, maybe even say May, but by 30 June, that doesn't really, it's not enough to verify the 30 June balance. In that instance, what we would be seeking for as auditors is something after 30 June. In some instances, we can actually get the maturity statement. Some banks will actually issue 30 June statements. They'll say, yeah, look, this is what you hold as at 30 June, which is great, but unfortunately not many do that. What you could potentially also do is get an online printout of the term deposit. So as at today, so it shows that, look, even though the term deposit hasn't matured, you've still got some evidence there. So yeah, look, it can be a bit problematic, but be aware that's the sort of things you can do to try and just smooth the audit process and make it go faster. Look, I have heard some auditors talking about potentially qualifying audits if I don't get something after 30 June. We generally steer away from that. But if you can provide something, again, like I said, it just makes the whole thing go smoother. So yeah, look, I hope this has been helpful for you. If you have any questions about this or other sort of technical concerns, please feel comfortable to reach out to myself or to your audit partner at Aquila. Thank you very much.